start things out this time around with our breakfast futures, I like to call them. Let's get you updated on our orange juice today. Which direction is orange juice going on the futures trade? Well, so far we have the March contract 75 cents higher at 124.05, and the May is up 70 cents right now. What about the coffee? Is the coffee higher or lower? Well, today we are definitely higher, up $1.10 on the March futures at 102.70. The May up $1.10. And on the sugar market, now here on the sugar, you have your May 71 points higher at 12.64 a pound. You have the May contract 70 points higher at 12.72. Let's go to the grain trade and see what the latest information is coming out of the CME Group trading floor. Right now on the corn, we are down a penny at 3.82 and now 3.82 and a quarter, so still very quiet action in the corn. And we have new crop December down 1/4 cent at 4.03 3/4. It's been hanging there most of the morning now. If you go to the soybean trade, opened firmer this morning and then sold off of those highs. Right now the March contract is up a penny and a half. We're at 9.23. And we have the July contract up a penny and a quarter at 9.47 and a quarter. In the wheat market, we have the March Chicago wheat currently 2 3/4 lower at 5.14 and a quarter. And you have July down 3.5 cents at 5.26. Meanwhile, in Kansas City, let's check out the March. Right now, we're down 5 at 5.01. That's a new low for the day. And you have July down 4 3/4, and it's trading at 5.23 and a quarter. That's also a brand new low for the day. In fact, all the way across the board on the KC wheat, everything's on its daily low. What about Minneapolis wheat on the March contract there? We're down 2 at 5.68 and a quarter, only one tick from its low of the day. July at 5.80 is on the low at, that would be a loss of 1 3/4 cents. Scott Gecas joins us now direct from the edge of the trading floor in Chicago. And Scott, you have some brand new credentials here this year. You're with Prosper Trading Academy now. Congratulations.
Thank you very much.
Aware of the change. So anyway, hope you have a good start to the new year here in 2019.
Yes, thank you very much. I appreciate it. It's a great opportunity.
We look forward to talking with you in that capacity now moving forward. On the grain markets here, kind of slow going today. Do you think much is going to happen this week if we don't get those big USDA reports?
Well, that was a big thing. You know, the biggest thing was the USDA report being canceled or delayed, however you want to look at it. Still going back to, I mean, it's going to continue the trade war talks. The headline risk is going to continue until we can get some type of standard balance. So until that comes in, you know, you're going to still look at the short-term factors, short-term weather factors, the supply and demand issues. So right now it's just all due to headline risk, and we're going to keep an eye on that.
Okay, what about this Chinese negotiation going on here this week? Do you expect much to come out of that yet?
Well, I mean, who knows? I mean, one day you're hearing they're positive talks. Certain advisors are there that shouldn't be there, and now they're going to be there. So, you know, again, it's all headline risk. It's some days it's going to be good, some days it's going to be bad. But until we get a definitive factor, we expect volatility to stay elevated. Expect some big spikes and drops, just like we did yesterday. We've seen a big sell-off yesterday, adding a little bit of support here today for a little bit of a pullback. You know, one thing I want to point out is that the open interest is still staying strong. That's definitely a bullish catalyst. So we're going to just keep an eye on the headlines for that factor.
That's a good point. I want to check out the cotton market, and then we'll pause for a break. On the cotton trade right now, we now have the March contract 48 points higher at 73 cents even per pound. It had been as high as 73.92 and came back significantly off of that so far today. We'll come back and have more with Scott Gecas when we return. We'll talk livestock after this. Well, let's rejoin Scott Gecas. He is at the edge of the trading floor in Chicago, and he is now with Prosper Trading Academy. And let's talk about our livestock trade. Scott, on the live cattle and feeder cattle, I guess you would classify that as a reversal this morning, where you had a lower start to the day and then they turned around smartly after that. So the last hour or so, let's take a look at our current futures and see if we're hanging on to those gains. On the live cattle trade first, yep, we're 85 higher on February at 122.78. We're off the high by only about 25 cents. If you look at the feeder cattle market, you currently have the March contract at $1.28 higher at 144.10. So we're still $2 and a dime off of our earlier low. Quite a turnaround there. In the lean hog trade, well, you currently have the nearby February contract 30 lower at 61.65, while the April is down half a dollar at 66.25. They just haven't done much of anything in the hog side, have they?
Yeah, the hog side is very quiet. As far as the cattle goes, the open interest is still climbing. Going into the big sell-off that we had yesterday, market was in a little bit of an overbought territory. That's why you've seen the spike a little bit lower. The reversal today is just more of profit taking or positioning. We're going to see, and we're going to keep an eye on that 122 level. That's a very big, significant level. You know, if we can close above it, we're going to have a continuation to the rally. If we close below it, you're going to see that strong sell-off continue to the downside.
Okay, now as we get into, let's say into February or March, what are the seasonal trends here for the cattle and hog markets?
Yeah, well, going into the spring months, the warmer months, we expect that, you know, the product should have increased demand. With that strong seasonal demand, however, from the holiday season, whether or not that's going to continue on for the rest of this year, it's still yet to be seen. You know, with the trade war talks going back and forth, you know, U.S. beef has not been such a strong export, but if they do have positive trade talks, we expect those U.S. exports in beef alone just to continue a little bit higher.
Okay, well, Scott, best of luck on the new capacity here this year with Prosper Trading Academy, and look forward to talking with you a whole lot more here in 2019. So wish you all the best.
Good. Thank you very much.
Scott Gecas with Prosper Trading Academy. And now let's take a look at